Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives with an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the city of big shoulders. I think that was Sandberg who said that, right, Cody?
It was.
It's Carl Sandberg. Joining me today from Michigan, the man himself, dairy broker and agent, Mr. Cody Koster. And joining me from Wisconsin, grain and feed broker, Mr. Brandon Weigel. Team, how are we today?
Doing great, Jim.
Doing well, Jim.
Not bad to start this thing out with a Sandberg reference.
I mean, it's pretty darn good, especially getting towards the end of the week here. I am pretty pumped about that one too.
Yeah, I'm feeling okay, right? I mean, it's hard to believe we've pushed through a week of December now. I feel like it was just Thanksgiving. We're inching our way closer to Christmas.
Yeah. Are you on the good list or the naughty list this year, Jim?
Whose list?
Oh, hey-oh.
There we go.
Hey-oh.
Gents, we have a lot to run through today as we do approach Christmas, because we're also approaching WASD tomorrow on Friday. So we're recording Thursday. So Paige, if you would kindly timestamp the broadcast, it's Thursday morning. It's about 10:30 Chicago time. So we're about 24 hours away from the December WASD report. Markets have tried to maybe reposition themselves a little bit ahead of that report, but maybe also feels like things are going to lighten up, get a little bit choppier as we head into some of that lighter holiday style trading anyway. So just quick look at the corn market. It's slightly higher on this beautiful Thursday morning in Chicago. We do have March corn hovering just under 490 at the moment. Quite the swing from the 470 lows just a week or so ago, but still unable to come back and hit that $5 figure. Wheat has been helping out. We've got March wheat back up at 640 this morning. So nice run lately on wheat futures supporting corn. We've got March beans at 1320 or so this morning. And March meal, normally that stubborn little byproduct, has had a very nice pullback over the last couple of weeks. It is trading under $400 per ton this morning. So for those of us feeding that protein, nice to see that pricing pull back a little bit. And we'll be asking Brandon to touch on that shortly. But in the meantime, let's talk about the folks feeding that protein with Mr. Cody Koster. Cody, what on earth is happening in the dairy markets this morning?
Oh, Jim, as always, thank you for having me on this esteemed show. I greatly appreciate it. Happy to be back talking to you and the team and the rest of the country here. I think the big part in dairy that we had this week, at least, was the GDT Global Dairy Trade that happened Tuesday. Myself and Mr. John Spainhauer had a podcast on it. And even though the GDT was higher, which led our prices to kind of, elevate themselves the past couple of days, also, one of the big standouts from this GDT was the country of China not quite being in the buying seat, right? They've been there, they've been gone. The past couple of weeks, they've been buying a little bit more than normal, kind of leading into the end of the year. But this GDT showed that they were not there, right? And things that we hear from boots on the ground overseas is that China may be kind of getting ready for maybe a little bit of a recession. People are holding their monies a little bit closer to the chest. There isn't as much food purchasing going on over there, which I think led to, the regions still having in other countries stepping in for China in the buying space. But China not being there is definitely a big story, especially with one more global dairy trade this year. And then we roll into 2024. So that was kind of a big a home hitter for us, which, as I mentioned, has rebounded our prices, especially in quarter one. You look at Jan through March as a pack on class 3, we're up about 60 cents starting from about the 30th of November. We've rallied ourselves. But what I keep telling folks is every time we have these rallies, 50, 75, $1 higher, we usually come off pretty hard after that. It's almost like we've gone a little bit too high, too fast and settle ourselves back down, which is happening right now. We're about 16, 18 cents lower in quarter one, sitting right now and half an hour before spot cheese trade. So that's been kind of a big thing that we've been looking at as far as the dairy sector. Another thing that we've been keeping our eyes on is milk production overseas. Now, the way that like France, Germany report their milk production, we get a little bit late. So we just received this at the beginning of this week. These are going to be numbers from the end of November. So for reference, about November 25th and 26th, if you look at France's milk production, down 3.2% on a weekly total, Germany down 2.2%, United Kingdom down almost 2% right there. And I think the big question going forward is that's a big milk shed overseas, the biggest in the world. What happens if they keep coming off milk production? Our milk production keeps coming off in small increments also. What is that going to do to the tightness of milk, cheese, butter, dry whey going forward?
Okay, understood. Thank you for that, Cody. Yeah, the Chinese demand conversation, I think, is a big one, not just on your side, but also on the grain side. We talked about that a little bit in Parlor to Plate yesterday, where Kathleen hosted and talked about overseas demand. Brandon, we've been seeing demand for U.S. wheat pick up. So, Cody, to your point, I mean, we're concerned with Chinese recession. I think we have been for a while. The way they manage their economy, let's say during and or post COVID, in terms of the way they approach policies there and potentially trying to stimulate the economy a little bit. But I think it's going to have huge implications for export-friendly economies at both Northern Hemisphere here and in Europe that you're touching on, but also our South American friends that are planting, some of their key ag crops right now. We talked about foreign demand a bit. Anything happening on the home front, Cody? I know we talked with a lot of folks in your backyard over in Michigan, dairy farmers who, unfortunately, just due to timing of rains, they've still got some corn standing out there because things were just a little bit wetter, I think, on your side of the lake than ours later in the season. What else is happening here in the U.S. milk-wise?
I think a big thing that's happening right now that is kind of bubbling up on the back burner and going to, I think, affect 2024, maybe starting in Q2, Q3, is heifer replacements, right? We've talked about this internally on company calls. We've talked about this on calls that you and I have been with other producers throughout the country. But everyone that we talk to, whether it be from New York, Texas, California, no matter where you are, heifers seem to be very tight, right? The replacements are just not there. If the replacements are there, you are going to pay up for them. Averages, we're hearing $2,800 to $3,000 per head. And as we have talked to a lot of these folks, it seems that the Black Angus market that people were breeding a lot of their replacement animals to has kind of taken the forefront of this, right? When people were getting $625 for day-old Black Angus calves, they were breeding a large amount to those to try to capture on the golden goose, if we will, right? And that is going to affect the heifer replacements going forward, which could very well lead to more tightness of milk in this country as we, kind of get some of those older lactating girls out of there. If there's not as many to replace them, what are we going to do? We're going to be able to pay up. With prices the way they are, how much can you afford to buy these replacement heifers if you don't have them on hand? But also, how many are there going to be? I think that's the big question that's looming to everybody. And it's really now just starting to get talked about in a steady rotation of producer to producer, no matter where you are, of this is going to be a bigger, we don't want to call it a problem. This is going to be a bigger thing going into 2024 than what we are looking at right now.
Yeah, so maybe not a problem, like you said, but it could be a very fascinating dynamic for pricing should, let's say, demand pick back up at some point into 2024. So, for now, it feels like maybe that weak demand would not be offset by some of these declining numbers. But maybe if we also see demand pick up, you maybe have a different type of, let's say, second half 2024. Perhaps.
Exactly. And I think that's what's going to be positioned going into 2024 as it's going to be a leading factor of milk prices along with demand.
Yeah.
Right. I think those are going to be two things that go hand in hand leading us into the new year personally.
Okay. Awesome. Thank you for those insights, Cody. And then, Brandon, along these lines, we're talking constantly here in the U.S. about the supply potentially offsetting demand. And on the corn front, we are seeing demand mostly weaken gradually, right, over the last several months, speaking of the overseas demand, conversation, while also managing to continue to keep a very substantial and strong output for our U.S. corn crop. The soybean side, not as much, right? We've seen demand remain very strong for beans and meal, while supply remains somewhat limited. And it's been impacting the soy complex pretty severely over the last 3 or 4 months. We said at the beginning of the show, protein pricing has come down lately. But Brandon, are we celebrating $400 March meal futures, or is it more just it's kind of nice to see a $40 break here and there?
Yeah, no, it's definitely nice to see this break here in the last few weeks. We had a lot of folks that were pretty nervous when we made that $60, $70 run higher here in the last 3 to 4 weeks. And a lot of that was primarily driven by the dryness down in South America. Well, we walk this thing forward here within the last 7 to 10 days. Brazil has finally started to catch some rainfall, which is why we've seen some of this relief in the protein market. And, from the resources that we talked to down in South America, Argentina has been in very good shape so far, much more so than the last 2 to 3 years when they have had severe drought. So their production estimates over what they ended up producing last year are expected to be about double on the soy crop this year. Now, on the Brazilian side of things, it's a little bit of a different story. They are catching up on their planting progress, and it's still really early in the year. So in terms of how this impacts yield is yet to be seen. That's going to come a few months down the road, but they have pulled back their production estimates. Now, keep in mind, their planted area on soybeans this year was expected to be up about 2.8% versus that of last year. So even though they're expected to lose some yield, they have added acres to offset some of that lost production.
Okay, understood. Yeah, we've been watching the South American weather forecast very closely. And even with the Brazilians having some relief in terms of some moisture and precip lately, it kind of makes a lot of us wonder if it delayed planting enough, and if conditions weren't as appealing during that first, let's say 3 or 4 weeks of planting, how many folks are going to have to go back, replant this thing, and potentially then impact yields further. So you noted the increased acreage, maybe helps offset that. But if the guys have to go back in and replant, what does that do for the bean development there? And then looking forward, maybe 3 months, will they be delayed planting that second corn crop that is that big exportable second safrinha crop down for the Brazilians? We've also got WASDE tomorrow, Brandon. So in terms of, we'll get to some bold predictions, but you noted the private Brazilian estimates already coming down a bit. Do you think the USDA is going to start to attack South American production numbers, or do you think the focus will still mostly be at home tomorrow?
I think that we'll probably see a little bit of both. I definitely think we'll see them revise that Brazilian number lower. I mean, CONAB has already come in and cut their production estimates, so I think the USDA probably follows along those lines. I've seen cuts all the way down from 152 to 154 million metric tons out of Brazil. I think CONAB's still up around that 161, 162 mark, but I think the USDA probably does come off their 163 estimate right now tomorrow.
Okay, understood. And we've been talking about the grain and feed markets a bit, but Cody touched on the beef industry for a moment there. You are also tracking cattle markets. Anything on your side of Lake Michigan, Brandon, that you'd like to touch on in the cattle industry?
Yeah, so obviously this last month and a half now has been really, really ugly in the feeder cattle space and the live cattle space. And it's kind of interesting if you line up when this whole downfall kind of began. It started right around the same time that we saw the resumption in student loan payments. So whether that was what kind of broke the camel's back or not, it definitely is something that we need to keep an eye on, because the resumption of these student loan payments means that the average consumer that has student loans is paying $200 to $300 a month that they now don't have in discretionary spending. So we're seeing some trade down there, either transitioning from higher cuts of beef or higher quality cuts of beef to lower quality, or just straight out transitioning to different cuts such as pork or poultry has definitely been part of the reason, because as Cody noted, fundamentals are still very strong in this beef market. We haven't even seen our tightest supply yet, and we haven't started to rebuild this beef cow herd. But this weakness lately has appeared to come more so from the consumer standpoint than not.
Okay. Yeah, I think this holiday season is going to be pretty fascinating too, because that'll give us some huge indicators from the strength of the U.S. consumer. I think we saw some nice Black Friday figures come out from the retail sector mostly. I mean, I guess they weren't too disappointing despite interest rates being where they are. I know Fed funds futures are indicating cuts through 2024, but they're not very dramatic cuts that are forecasted out there. We're talking, I think, a Fed funds target rate at the moment of like 5.25 to 5.5. I think futures are indicating that maybe you pull them down towards 4.5. So again, is it nice to see a little relief? Sure. Are we celebrating that? Not exactly. But I think this holiday season is going to be indication of what consumers are willing to add on to that already enormous credit card debt that folks are dealing with here in the U.S. So that's going to impact beef. It's going to impact dairy. We'll see what happens here as we move through the end of this calendar year. But gents, before we do that, I suppose we should do some bold predictions for tomorrow's WASD report, about 24 hours away. And Brandon, we're going to start with you. Can we get a bold prediction for tomorrow's WASD?
You betcha, Jim. I think that tomorrow we are going to see the USDA pull back our soybean ending stock number on the back of higher crush. We've had 2 months now of record crush. We've got soy oil inventories that are some of their lowest on record. So I do think that we see the USDA pull that ending stock number on soybeans back closer to that 220 to 225 mark.
220 to 225 mark. And all because of ramped up crush.
I do think so. I think that'll be a big part of it.
Okay, so I think we had 220 in that October report. We saw the November report last month bring us back up just a touch on the ending stocks number. So we're calling potentially back to 220 ending stocks on beans. I'd say that's supportive beans.
Certainly.
Certainly, indeed. Cody, bold prediction. Tomorrow's WASD.
Now, I need to let everyone know that I'm not quite the WASD expert that you two are. I get most of my information from your team. So, that's what I'm saying.
Right.
The brains behind everything right here. So, With that being said, I am going to agree with Brandon on the soybean because, well, I don't touch soybeans very much. But on the corn side, speaking relative to the market, do I think we're going to be a $4 corn number? No. $4.50? Possibly.
Interesting. I'm not sure if it's a bold WASD prediction, but we are getting into some bold pricing predictions. So we're trading March corn futures right now at 486, and you're calling for a 450 March corn number. Is that by the time March goes off the board, or that's in the next few weeks?
That'll be the next few weeks. I don't say we settle there, but I do believe that we will draw back, hearing from you on all the rains and precipitation that could possibly be coming in to the Brazilian crop. I believe there will be a little bit of a fall apart in the corn market. Now, not settling at 450, but at least touching that number.
Would we trade $5 first before trading 450?
I don't believe so. If you look at March, we cannot break through 495. We have tried 11, 12 different times, and the market says, no, sir. So, with that being said, I believe we go to 450 first and then rally off of that number. As the market usually does, we go too low, too fast, rebound, too high, too fast, and kind of come off. So, putting a little spin on your bold predictions.
Heard it here first, folks. And Brandon,
there you go.
I'm going to jump back to you. So we're trading 486 March futures. The low, we'll say round number, has been 470. So let's say 15 cents below where we're trading. Cody noted the frustration of this market trying to push $5, 15 cents above where we're trading. Brandon, what would we trade next? $5 or 470? 15-cent range each side.
Yeah, I want to say 470 again. I do think that this market feels fairly well supported just due to the fact that our export prices are now below both Argentina and Brazil. But I do think we are going to struggle a little bit. I do think we see 5 at some point, but we've been stuck in this 470 range on March corn.
Okay. It's been an interesting little stretch because we've seen March wheat run up almost $1, right, over the last couple of weeks. And back to that foreign demand conversation is that I think Chinese stepped in and saw board pricing of Chicago wheat futures and said, haven't seen this in a while, down at 550 on March U.S. dollar had maybe pulled back a little bit. They've had some issues in some of their wheat acreage as of late. The Australians aren't able to produce as substantial of a crop. The Argentines haven't quite bounced back just yet. Looks like they might with this El Nino forecasting over the next maybe 6 months or so. They'll be okay. But in the meantime, they stepped in and grabbed a chunk of our wheat product. I think that has given corn a little bit of a boost. So maybe, as you gentlemen are suggesting, perhaps that boost has been somewhat artificial, and this rally could be short-lived, and perhaps tomorrow's WASD is what sends us back into that 470, or for a Cody, a 450 type of range.
And bold predictions for you, Jimbo?
Oof. Well,
yours.
thank you very much for asking. I think on the Brazilian side, the USDA will take the Brazilian soy number down below 160. We'll go below 160 already on that Brazilian soy. Some could say it's too early for that, Jim. Too early for that kind of stuff, bud. But I'm calling it. It's a bold prediction. We're going sub 160 on Brazilian beans. Thank you for asking. I appreciate that. Gents, anything else before we wrap up?
I appreciate you having me on the show this time, Jim. It was a great honor.
It is an absolute pleasure to have you, Cody, and you as well, Brandon. It's been a wonderful show. Great insights today from you both. We would also like to, of course, thank Paige and the Everag Insights crew for their support. And thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.